about the digital currency. So I do hope to have an interesting conversation. So before I start the questions and what it means for the gold trade, because it is obviously it's in its infancy, it's not even fully available for the retail people. So Professor, is it possible, do you have a presentation or you're going to, no presentation? Would you like to tell us a little bit about the currency and then we move on about your views? Then it'll be easier, yeah?
Okay. For the, I think, sake of time, I'll be brief as much as possible. You know, all of you have been...
we can use our full time.
Yeah, okay.
Okay, great.
So I think all of us have been listening to the concept of CBDCs. It is coming and finally it has come. Okay, so except for as currency notes, you know, if you look at the other modes of digitization, you will find that all other use of papers in the modern financial system, be it bonds, securities, transactions, communications, receipts, correspondence, everything has been made digitized. Possibly the last thing what has come is the central bank currency, possibly the last thing happening in the digitized mode. And we have been hearing about this since 2014. But effectively last 2 or 3 years has gained a lot of, I think, traction on this, and many central banks, including Reserve Bank of India, has been at the forefront of introducing this. We already have a retail segment experimentation going on. And in terms of technology innovations, you know, people are even now are kind of skeptical about its uses, how this can change the entire world. I just want to quote one thing about one RBI Deputy Governor when he says that crypto and other crypto products like NFTs are being hailed as the innovation that would usher in decentralized finance, which are blockchain application geared to disrupt the traditional financial system itself. So, when you talk about introducing CBDCs, at the back end, some degree of disruption we are kind of afraid of. At the same time, we also want to get a new innovation which is going to bring a lot of efficiency. Today, I would like to take this discussion from that perspective. How do you think the introduction of CBDCs is going to bring the efficiency of the financial system, particularly in terms of transaction? So maybe let me start with Vikash. If you can take us through why CBDCs, when at the first place we have several other things of digital payment.
Thanks, Professor Abhiman. I think he is an expert. One side I have an expert on CBDC, other side I have an expert on gold. So let me do some justice to it. So if we talk about CBDC, we have people will say that we have a very excellent infrastructure now, digital infrastructure. If we talk about India in last 10 years have done a lot of work on IT infrastructure and all. Probably UPI is a very, very successful sort of a digital payment module which has come to us in India. And put together last year, we have done roughly around $1.5 trillion of digital payment transactions from India. As compared to, if we say US, UK, Germany and France put together, they have not done this kind of volume, what we have done individually in India. So that's a kind of volume and a successful side of the story and the structure, digital infrastructure we have today. And then why CBDC? See, CBDC is, I would say, would be an alternate to this digital payment infrastructure, an alternate which is more towards, I would say, replacing cash. And when I say replacing cash means today, if we talk about wallet, we don't know individual wallet, what money I am having, what money you are having. So the endeavor here is to actually move money from a account to a wallet, where there would be, what we are envisaging would be a cap to a certain extent, and then a person can move money. It's like a cash moving from one person to other. It's like a cash moving from one wallet to another. See, UPI also, if you see in India, if you talk about the tier 1 or tier 2 locations, UPI is very, very popular nowadays. Consider a case, I'm just talking to from a use case perspective. Say a farmer who is actually withdrawing cash from a branch which is say 5 kilometers or 10 kilometers away and taking cash and giving it to someone. So basically CBDC will serve that. The wallet will get created, and that, suppose he has to give 500 rupees cash, he can, with a click of a button, he can transfer that cash to another person. So this is one use case which I feel a CBDC can sort of serve the purpose, and it's the trials which we have seen in a closed user group. In retail, there are 16,000 transactions which we have done. I think some of the banks are involved in trials and all. And let me tell you, the kind of UI, UX which has been prepared is very, very user friendly. With a click of a button, it gets transferred. So I feel it's a...
And maybe initial comment from Rahul.
Yeah, thank you very much, Professor. I think Vikas very well summarized it. And before I start with my initial comment, just wanted to mention a few things, that CBDC is here, CBDC is live. So your opening comment was, when will a retail user get to see or get a feel of CBDC? So time is now. There are already banks who have actually, though we are calling it as a pilot phase, but it is actually live. There's about 8 banks as of today who are offering CBDC wallets to people like us. So you can approach to any of those banks and they'll be happy to offer a CBDC wallet to you. Now coming to the point, yes, undoubtedly, I think India has one of the best payment infras, and we have grown leaps and bounds in last 10 years. If you talk about UPI, NEFT, RTGS, all wonderful products, real time, and I think at the most cost efficient way it can be offered, is offered in India. So why CBDC? So CBDC, technically there are 2 or 3 more critical motivators that the central bank had. One is obviously India wanted to stay ahead of time. In fact, so just the data that as of now, about more than 80 central banks, which contributes to about 90% of the global GDP, are already working on CBDC. So when I say working on CBDC, at least on the development stage or even at the pilot stage, there are only 2 or 3 economies which are relatively smaller economies who are already live. Few others, bigger economies like China, Russia are at the pilot stage. So what is the motivation factor behind going for CBDC? When I speak about from the India perspective, there is a substantial cost saving. I think we as an India, being the largest country with the largest population, consume the maximum amount of cash. And it costs, hoping about some estimate 6,000 crores to RBI to just manage that cash, whether it is printing, whether it is distribution, or probably recycling of cash, etc. So the biggest motivation factor is substantial cost saving. Obviously, it brings a lot of efficiency in already developed payment ecosystems within India. Then another critical motivating factor is the financial inclusion, which Vikas also alluded to. In the remote areas, people will have to travel a long way. Cash is still the preferred mode of payment in rural areas. So people will have to travel to banks, go and withdraw cash. What if we offer them a wallet which may not be dependent in long run? Even this is a thought in the concept paper of RBI, that we may do away with bank accounts altogether and still issue wallets to the users who can receive and pay currency in digital form similar to cash. And so financial inclusion is one of the biggest factor in terms of going for CBDC. Lastly, most of the central banks are already discussing use cases, at least for the cross-border payments. So we see, again, India being the highest recipient of inflows globally, about $20 billion annually. So reducing the cost, reducing timelines, making the cross-border payments frictionless is one of the critical factors or critical motivating factors for RBI or central bank to go for CBDC. Sorry, I can go on, but yeah, these are the critical motivation factors from RBI.
Just to add what Rahul is saying, see, one of the use case, let me put use case so that it will be more sort of clear with examples and all. consider a farmer today when we are talking about a farmer or say any person where we are giving subsidies, government is giving subsidies and all. Now subsidies, what happens in terms of now Yojana schemes and all, what is running is it goes into or a gas subsidy or a crop subsidy or a fertilizer subsidy, it goes into an account, right? Now when it goes into an account of a farmer, it is for getting that crop or getting that fertilizer, getting that gas, this thing and all. And it may get transferred from one account to other. But what it is envisaged over here is that there will be tokens issued in CBDC. It is like tokens are getting issued. Now that token can be in the form of a crop token, it could be a fertilizer token, it could be a gas token. So when I suppose in a CBDC wallet, a farmer gets a crop token, that crop token will be used only for buying a crop. Or a gas token will be used for getting a gas. So in a way it will, if it gets transferred, someone will else buy a crop only. So that is how the end use will get restricted, and it will go to a right for a right purpose and to a right person, and more from an economic growth perspective. I think that's a very, very powerful thing today, which will happen through CBDC. And see, the infrastructure which we have, UPI and all, we can always say that UPI is a good infrastructure we have. See, and it's an alternate infrastructure which is getting developed. Yeah, you're right, there is an alternate infrastructure which is getting developed. But UPI is again account based. It's not a wallet based. This will be more of a wallet based kind of a thing, moving from one wallet to another. So there will be some, what we are seeing from a regulator perspective, it will be some anonymity of the transaction, but there will be a cap to that transaction. The idea is to replace cash. That is the idea. And as Rahul rightly said, that 5,000, 6,000 crores of money is getting into printing, security, minting and all. I think to some extent this money can get saved from CBDC's perspective.
Okay, I'm actually very happy to see two commercial bankers talking on central bank digital currency. It has been all along, central banks are only talking about it. And
no, just to add, we have to be on right side of
RBI also.
And you are on my right side, ex-RBI guy.
So, and I want to highlight one point from the commercial banking perspective. The technology what is supposedly using is the ledger technology, which if you see it very carefully, which tells us that commercial banking would be redundant at some point in time if we use the technology in the spirit of it. What are your views? I'll start from Rahul first now.
So we work with a lot of fintechs and a lot of neobanks. Okay, so when those PSPs, fintechs, neobanks came, they said they will challenge the concept of banking, and it will be an existential crisis for the bank. But what we have seen is the banking system in India, okay, even if we talk about CBDC, see again, banks, commercial banks like ICICI, Yes Bank, all other banks are critical intermediary for the distribution of currency as of now, today. So RBI, you can't go to RBI and say, I want to withdraw money. Even though it is a sovereign legal tender, you still need banks to go to. Similarly, the model is same in case of CBDC as well. You would need banks for distribution. So DLT is limited from when you intend a currency from RBI to banks. That is where DLT technology is being used. Whereas for further distribution, it is predominantly on APIs where customers could load wallet from their accounts and could do either person to person or person to merchant transactions. So I think from the infrastructure requirement perspective, there is a very critical role that banks will have to play for obviously distribution of this digital currency. Then obviously once it is distributed, it has to be used. So how it is to be used, like Vikas suggested, there could be DBT use cases, there could be person to merchant use cases. For example, if you go to a mother dairy outlet, you typically like to pay either through cash or UPI. So what if I give an option or we give an option of paying through CBDC as well? So somebody will have to then credit that money into or first to provide an infrastructure to that mother dairy outlet to receive money in CBDC, then eventually settle it in the current account till the time we build a complete ecosystem where he could also do purchases from CBDC or e-rupee. So for running a whole ecosystem, that is to issue wallets, to distribute money, to then options to receive CBDC and then eventually to credit it to your account, you will certainly need a bank infra. So I don't think so. Banks are at risk. In fact, banks, in my view, I think Vikas will agree, banks will tend to gain only because the cost we are talking about, there's an equal amount of cost that is spent by banks as well. So almost all the banks, they are filled up with cash, currency chests are full, breaching their limits, so they are not able to dispose of enough cash. So I think there's a substantial cost saving for bank as well, which they can invest on creating this infrastructure for smooth proliferation of CBDC.
Okay, now Vikas.
So I think it is important to capture, from a bank perspective, I think it is important to capture money in motion. See, money will always change hands and it exchanges hands. So if it moves from one pocket to another pocket to another pocket, it will remain in the banking system. And let me tell you, from a fintech perspective, I would say that, there are various cases where banks are now partnering with fintechs, and it's a win-win equation. I would say the trial which has happened in the wholesale space of CBDC, and we have also done that trial, and we were sort of done a reasonably good volume, was on a GSEC side, government security side, where wholesale CBDC space, there is an interbank transaction on government security which happens, and on T+1 the clearing happens and settlement happens through CCIL. This is the model which is there. Now with this CBDC coming in wholesale space, the clearing and settlement is happening instantaneously. And in November month, when 9 banks actually were participating in wholesale bank CBDC trial, and there was 7,000 crore of government security settlements which happened through CBDC. That's a very successful trial. And I would say in this case, why I gave this example, NPCI has provided that platform where the settlement is happening, and that's a platform. So I would consider it like a sort of a fintech which is participating with banks and all to do these trials and all, and these trials are successful. So I'm saying it's a win-win equation where settlements are happening in time. What will happen with this settlement which is happening at T+1? More and more volumes are coming, more and more churning is happening. So in a way, it's a good use case for a bank, and more volumes are coming to bank. So see, it all depends. So on one side, probably we'll see maybe in one pocket the money is going out, but from the other pocket it is coming in. So so it's very early to say whether what will be a situation after 3 years or 5 years today, right? Tomorrow we don't know what is going to happen, but I'm saying net, as I see it, it's money in motion which needs to be captured at banks' end.
My view also is that I don't think banks are going to be under pressure because of this. I mean, we'll need banks to function. Also, given the state of economy, we still are so reliant on cash. 32 lakh crore cash in circulation, and today somebody was making a presentation. Much of the rural still relies on cash and gold. Now, before we even talk about, because the idea is also what is there for the gold trade, CBDC, it will be absolutely fantastic if you could find a currency which you can use only within the gold market. Everybody, the bullion trader, the jeweler, everybody does that. If they want to exchange it for normal cash, then it comes in, it becomes a beautiful ecosystem. Now, that's a utopian world, honestly. Today, we don't have that thing. How do you move all these people to hold digital currency so that they can buy gold using only CBDC? I think that will be a fantastic thing to do. Or if you buy with CBDC, you get certain incentives. That's the other way to do it. But then you will be cutting out the bulk of the rural markets, because which are still apparently, I mean, there was the one presentation which said people still buy gold in rural areas because the banking is low. And wherever banking infrastructure is higher, in fact, some presentation came, they did not go for gold. wherever banking infrastructure was there. So given this state, I mean, when it comes to it, it will be good to introduce it into the gold trade. I think, in fact, in the pilot itself, I would be more aggressive to say, get some jewelers, get some CBDC usage. It will be fantastic. Then the responsible sourcing, in fact, in one lot, without going through all this, everything will fall in place. But are we ready for it? I don't know. But it has got to be piloted.
So, you want to? No, I think I would say gold is like it's a currency only. See, the way trials are now, now the trials are happening in domestic market, right? Where we are talking about changing hands from one person to another, cash going from one person, from one wallet to other. The next use case could be cross borders, where in cross border space, like Rahul mentioned that there is a trial, there is a project, what's that project called? Ubin.
So they were
Jasper Ubin. Jasper Ubin is a project which is happened between Canada and Singapore, where Canada and Singapore, they did a project where both these companies, both these countries are on a DLT basically, blockchain technology, and with a click of a second, the money is flowing from one country to another country. What is it happening? What's happening is that SWIFT is getting replaced. The cost of SWIFT is getting replaced. So in a way, when these currencies are getting exchanged from one to another with a click of a button or a click in 1 second, gold dollar transaction can also happen.
Can I ask one question here? This is again more understanding. Will the CBDC have a different exchange rate from normal rupee?
So see, CBDC, now the domestic trials which is happening is one token is equal to 1 rupee. So it all depends from a country to country how they want to tokenize it, what will be the cost of a token, if it is for a crop, what will be the cost of that token. So it's a tokenized system. So if tomorrow 3 countries decide that for them there is it may happen, they may say that okay, it will be on a reference rate and then it goes. That is one way of looking at it. They decide on a daily basis this is a reference rate. Other could be like India decides that okay, internationalization of rupee they want say 2-3 countries where they will use rupee as a kind of a common currency. It may happen that way. So it's based on 2-3 countries how they want
But
to
still the currency exchange rate as of now, it is going to be, it's not intended to be separate from rupee and digital rupee.
So no, it is when you say intended to be separate from a
No,
rupee.
I'm just saying I have cash in my bank account. Okay. Today, if I want to remit dollar to, let's take a US thing, there is an exchange rate.
Correct.
I have CBDC, which click of the button can go.
No, yeah.
Will that exchange rate be more beneficial to me?
So what happens? See, in that case, see there are again various use cases which can happen. See, one case could be CBDCs are a platform.
Yes.
Where they invite 5 banks to provide liquidity, and they provide 5 banks to give a quote. It's like a multi-bank platform, and from an end user perspective, the rate will come out, which is a rate which is a dollar rupee or a gold dollar rate, and that rate gets into it. Or tomorrow, maybe central bank can decide, okay, let's use a reference rate for gold dollar for today and do it. So this is, again, these are the various permutation combinations which may come out, which may emerge, but right now it's more of a domestic thing which is getting talked about.
So just want to add that CBDC is basically an equivalent value, virtual equivalent value of 1 rupee. So it is exchangeable at par. So very clear, and I doubt, though it will have to be seen, that it will create any arbitrage opportunity from the FX rate, exchange rate perspective. In terms of how will it pan out, see, typically Vikas is correct, typically how the transactions happen in case of a credit card as well. So there is a reference rate which is used to convert currencies. So for example, 2-3 projects are already still at pilot stage. So MCBDC, which few countries have named it. So multi central bank digital currencies where China, Hong Kong, UAE and Thailand have come together. So therein you can actually transact in either of these currencies, but exchange rate is particularly decided between the banks as a commercial call. But yes, I doubt that it will create any arbitrage opportunity vis-a-vis the actual rupee lying in the account or cash.
Okay, I think Rahul, I'll just take one of your earlier comment on the cross-border transaction and usage of CBDCs. What we have seen that, particularly from, again, central bank's perspective, the moment you see higher volatility in exchange rate, central banks start buying more gold. I'm just trying to link this with gold.
Correct.
Okay, and central banks are cautious to introduce CBDCs for cross-border transaction because they see, possibly they perceive it may have some degree of volatility. So you see that there is a link between gold as well as CBDCs, particularly in cross-border transactions. What is your take on this?
See, as I said, so from the cross-border perspective, and if I talk about from India perspective, particularly in their concept note, they have clearly mentioned that this is one of the motivation for them for facilitating cross-border payments through CBDC. But way I see it at the current point of time, we have been doing multiple discussions with central bank, and I'm sure Vikas will second that. Currently, there is no use case per se which is being discussed from the Indian context in terms of doing cross-border transactions from CBDC perspective. But my guess would be, even if we start some pilot on that front, that would be that could be predominantly for smaller value transactions. For example, individuals would want to remit money out under the LRS, because one very critical point which Vikas highlighted is CBDC, because it is digital, it is programmable. Okay, so you can play around in terms of where do you want money to be used. You can create separate sub wallet saying that this is your LRS sub wallet. This is technically you can use money to pay, do any cross-border transactions within your LRS limit. Another, I think the most earlier use case could be in terms of receipt of money. So as I said, India largest receipt of forex. So a lot of money comes in from Indian diaspora abroad for the family maintenances, etc. That could get replaced using CBDC. There is a MTSS business. So a lot of money comes in through MTSS business, where money gets eventually paid out to the beneficiary in the remotest of areas. There we could use a CBDC use case more to receive money, but yes, I agree, more from the larger transaction perspective, specifically where the bullion or gold will get involved. I think we are still some time away.
You want
I think I feel that gold is a little far. It's not getting discussed as of now. But as I said, it's like any other currency. If tomorrow, technically, if someone wants to do, or probably if regulator wants to do that way, it can happen. But as of now, there are many other projects which are running. See, this is about CBDC. Let me tell you, NPCI is running one more project, which is, I'm sure everyone would be aware about, India-Singapore corridor, where P2P, person to person, person to merchant transaction, both inward and outward. The way we have an NPCI structure, infrastructure here, Singapore has a pay now infrastructure. So both these UPI handle will talk to each other, and money will go from one handle to another handle, and one beneficiary to another beneficiary.
It is already done.
Yeah, so yeah. So I'm saying, so there are many projects which are running. Gold is not yet talked about, but it's like any other currency. If tomorrow gets discussed, then it could be another use case.
So technology-wise, we are ready. So it is systematically.
Question for Rahman and then to bankers as well. Sanket and colleague and myself,
we had a paper, I think, that was quite liked a year ago or a year and a half ago, where what we found was that over a 20-year period across many different countries, wherever central banks have accumulated gold, the sovereign credit rating has been somewhat better than those that have not accumulated gold. And for the last 12 or 14 years, central banks have been consistently accumulating gold. And you also mentioned that, when there is uncertainty, they start accumulating gold. So that's point number one. Point number two is that right now we are having fiat currency. From 73 onwards, we moved away from the gold standard. Now, on one hand, central banks accumulate gold when there is uncertainty. On the other hand, you are introducing CBDCs which will have some uncertainty. So as a banker, ex-central banker and a professor, and as a banker, and then back to the gold part, do we see any, I'm asking you to think aloud over here, do we see any possibilities of linking CBDC and gold, to keep stability in the system, or CBDC will just be a programmable entity, just completely separate, no relationship to gold whatsoever, which could be one extreme. And the other extreme is, because of geopolitical uncertainties, people are accumulating gold. In fact, this last year, central banks, 2022 central banks accumulated 800 tons, which is the largest ever in history, right? So if I'm a central bank rolling out CBDC, would I see some possibilities of linking it to gold?
So,
Okay,
Acha.
so the first, Arvind, thank you for asking this question. It's very hard to answer, okay, so this one. But let me tell you from the macro perspective, how do you build the country's balance sheet safer? One of the critical way we create a safer balance sheet for any country, particularly those who are import dependent countries, has been to build higher reserves. If you find that my risk to reserve is increasing, you need to have a safer bet. Gold has been all along helping there. So the moment you find higher volatility in exchange rate, so you find I am at the risk of losing billions of dollars, which you see what is happening to India also. So then you need to safeguard yourself. Okay, so that's a macroeconomic factor which drives countries' gold buying. That's one. But the other one, because CBDC is the concern, is that it may lead to higher volatility. How do we bet for it? Is a gold a way to do it? It's very early to, I think, take a call on that. Yeah.
no, I can't be wiser than professor actually. So let me tell you only one aspect of it.
Sir, professors do not have a monopoly on wisdom at all.
So I'll agree with him. Only one thing which I want to, since you said that CBDC will bring uncertainty and all, see, we have to see what is the use case of it. The use case is for making payment, right? The way how do you make payment in gold? How central bank will make payment in gold? They'll make payment in gold by, say, rupee to dollar or whatever they'll do, right? Similarly, instead of rupee, they'll use digital currency. We have to think from that perspective. How it will bring uncertainty. See, the use case what we are talking about is digitally transmitting the money, digitally doing a remittance, right? That the central bank keeping a repository of gold, keeping inventory of gold during uncertainty and all is a separate ball game altogether. I don't think CBDC will change or rather will bring more volatility or less volatility because of that. Because it's a tokenized this thing, which is 1 rupee is 1 token. Let's take that way. Today, if RBI wants to make a payment, right, they have to give what will happen? They will reduce their reserve of dollar and make a dollar payment.
See, the reason I hear what you're saying, and I'm not disagreeing with you, but the reason I'm asking this question is that in the current circumstances, we are undergoing a shift in the we may undergo a shift in the global financial system where the dollar hegemony and the financial pipes which maintain that hegemony get partially or fully replaced because of various reasons. And we can see countries trying to make an attempt to do that. China further along the road, we are also proceeding in that direction. And therefore, it stands to reason that there will be volatility in the global financial markets. It's a given because you're moving away from a reasonably well-established system. And there are at least 2 countries, probably more, who are trying to flex their muscles, and because they realize that that financial system can be weaponized. Now you are bringing in every country, bringing in the currency with CBDC as a key thin edge of the thing into the system, right? And that's where the volatility is going to continue to come. So it's not just about making payments. I have a currency. Ultimately, that currency is, whether it is as CBDC or hard cash, paper cash, or as gold, whatever it is one part of it. And so therefore, the link that I'm drawing.
You're right. The volatility may come if there is a multi-bank, multi-MCBDC's use case which comes into picture where 3-4 countries are having a common currency and all. But if it's a single currency, today, if I say 82 rupees, I have to shell out to get $1, which means 82 CBDC. Tomorrow, if it becomes 85, it means 85 tokens. It's as simple as that. If I'm doing a remittance to another country, right, and if I have to make a remittance in CBDC, I'll take a liquidity, dollar liquidity, right? So what I'll do is, I'll say I'll pay you 85 CBDCs.
Okay, again, I hear what you're saying. So let me rephrase the question. If we were to go back to a gold standard at some point, which I'm not saying that we will, would CBDC also be part of this going back to the gold standard?
As of now, it's not sort of discussed anywhere. I don't know. Tomorrow it may happen.
Look, can I answer that? So again, just to summarize the discussion, see, CBDC is just converting the existing physical rupee into digital form. So CBDC per se will not be a factor of any policy level decision whatsoever, whether India would want to keep it as a fiat currency or want to link it with bullion. I don't think so CBDC will have any say in that.
Can I
Completely delinked.
Yeah, can I just comment? Last comment here. The understanding when CBDC was there were these cryptos, and all central banks had to react, and there was this is the understanding from reading papers, I'm not part of an internal committee, is that we should reply to these unregulated tokens, bitcoins and all that stuff with something of our own. So we brought this tokens. The idea was you don't issue fiat currencies, there is no control, there is variability, exactly what Arvind said. Now, if CBDC is just going to be reflecting the rupee, now suddenly we are saying it's a rupee, then it's just a payment system. It's a new payment system. It's not a currency by itself. Idea was it will be something which is different from what you are using. Therefore, instead of going to crypto, you come into a more regulated currency which every central bank will issue. Now, if the thought process is changing, which is right, I mean, you will probably have more controls about how you use the money rather than printed cash. We will save 6,000 crore on printing. Now, that's a completely different ballgame. I mean, it's like you are changing UPI into an upgraded system. That's the way it is. Then it's not a currency. It's a new payment system. That's the way I will put it. But because if it's not backed by anything, it's backed by the same promise. The idea was it will be backed by something, because what did crypto say, crypto or Bitcoin? They said we will not be more than 21 million, That's why the thing went up to $50,000. Now the crypto story is gone, thankfully. So I'm not very sure whether the digital story, currency digital story is also going to remain strong, and it will probably change.
Can I just respond to that one part? Again, based on only what we read from papers
Yeah,
and
exactly.
what is in public
We
domain.
don't know, so there's a
And
lot
in-
of things we don't know.
Yeah, in my case, again, the repeated disclaimer. Just as a student of, there would be some professors here, CBDC, as it is just the equivalence of your physical rupee in a digital form. Now, just as the notes issued in circulation are backed by the reserves, as Professor Abhiman Das said, this CBDC is very much a central bank issued currency, and it is backed by that. So any comparisons or parallels with a Bitcoin or any cryptocurrency, they are not currencies at all, whether they are assets or not, that's another for another day. But there is no difference at all. So we cannot, that would be like blasphemy for a central banker to hear
No, I
that
understand.
a CBDC issued, because by very definition, a central bank issued currency is different. It cannot ever fall in the category of a non-fiat currency. And a central bank digital currency or any currency central bank issues is backed by the assets on the asset side of the issue department of the central bank.
Yeah, that's becoming clearer now.
Right.
But what I said is, again, sitting far outside, this was a reaction to something which people put value on, and all central banks were worried that, look, people are going, this is almost like there is no promise. We don't even know who issues these coins. Therefore, we are all going to come out with this. And therefore, people could use these digital currencies rather than cryptos and bitcoins.
Yes, just on that point, because I agree that there was perhaps maybe a whether it was intended or it just was accidental, there was an overlap of these narratives which were going on. But as Professor Abhiman Das started in his initial comments, that in the Reserve Bank at least, even in other central banks, this has been the talk much before actually Bitcoin gained that kind of prominence, or the cryptos gained that kind of prominence. Because that's why it just, but you're right, the media narrative, actually there was a need for some clarity, but I think it was in the interest of everyone.
Yeah.
Sometimes the ambiguity helps.
Yeah.
So it looked like as if it was the central banks of the world were responding to the entire crypto thing, and they were telling, okay, forget crypto, we'll bring our own crypto as if. But that was not the idea, in fact. It can never be, in theory. It can never be, because the whole idea about crypto was DeFi, so that you don't have any central counterparty. We don't know. We don't
Sure.
recognize your fiat currency. Who are you? It can go down
I
like
think
that.
You're
So,
right.
yes.
It got accelerated after
Yes.
the crypto. See, what happens is, in last 1 or 2 years, we would have seen 2 years before this FTX debacle happened and the crypto came down. See, what was happening is that we have seen, in fact, and it has been in the media also, that there are a lot of money which is coming cross-border through crypto and all, where there is no control, and it was not regulated also. Someone is transferring 100 bitcoins to another person from US to India and from India to US, and there was a lot of arbitrage which was happening. So this got accelerated when these kind of news and these kind of things happened. You are right that it started much before that, but with all these things coming around and all, it got accelerated, and that's why a lot of trials have started happening, and India is also not of participating in all these trials and all.
So I have one point which is a little entirely different than the topic, but related to this. So there is a term which is difficult to pronounce for me. It's seigniorage. So I believe that is a very big number in case of printing currency and the cost and the value. So here it will be, enormous.
Sorry.
So-
he's telling that with CBDC, will be even more high, even more.
Yeah.
Very high number.
Yeah, because it's a difference between the value of the currency and the printing cost of the currency, which government, I wouldn't say, pockets, but it's there. That's a very big number. That's where US also, if US dollar printed currency globally is accepted and their cost is say 10 cents, so $99.9 is their gain, in that sense. So that's where I'm coming. So here probably the cost will further go down, and the seigniorage will further go up, and it's going to be beneficial for the
And other thing is,
central bank.
there are a
That's
lot
the
of,
point.
in terms of counterfeit notes which are there, if you see last few years, I would say this 21 data, somewhere it is published also, in 500 and 2000 rupees note, it is 50% higher counterfeit notes which were there if you take year on year. So that is something which will get sort of controlled with a digital environment, more and more digital environment coming in. Yeah.
I have just one this thing.
Yeah.
There is a general perception in the industry that CBDCs, once they are actual retail and in the market, they can be that concept can be used as a tool to restrict certain kind of transactions. And, certain purchases can be made only through CBDCs, maybe gold. What is there's a general talk going on in the industry, and perception is such that maybe after a year or a couple, whatever, whenever, that certain types of transactions can take place only by way of CBDC. What is your take on that?
Ajit, you and I both know this industry is making huge losses. This industry is really struggling for liquidity, but they still will hold 1,000 tons. Okay, so this industry is worried about so many things. But then when you talk about the research, diamonds are going up. Top end minimum, even Tangamail said minimum, they are even in the rural areas now, they are saying 5 lakh ko do, not even 2 lakhs. Okay, so we know about this industry. I think it is good they have some worries. Let's put it like that. When you make so much money, you should worry about something at least.
No, so but just to address the question, so this is not being discussed at policy level with RBI, so that's just a rumor. It is programmable, yes, as any other technology platform, it is programmable, but it will be programmed for right use cases, as Vikas suggested, for examples like DBT payments. So if government wants to give DBT for education, So in that case, we might restrict that it goes for education, but not for any other purposes, not even being discussed.
So I have one question, which is the attraction of cash is anonymity, right? The moment you have CBDC, you have a digital trail.
Yes.
So when you lose that attraction of anonymity, I mean, that is something which is which might actually prevent a lot of people from shifting to CBDC.
Correct. So I think you've hit the nail. This is, I think, one of the, when we were discussing what are one of the biggest challenges for rollout of CBDC, yes, this would, I think, feature at probably right at top, because you more comfortable you feel in terms of once you withdraw cash from a bank, you can go and spend anywhere. I'm not saying for illegitimate purposes, even for legitimate purposes, you say it remains anonymous. The purpose of the transaction remains anonymous. So RBI has been trying, right at the top, has been trying to portray and give assurances to the people that we will make this, or rather we will replicate the degree of anonymity that comes with cash in CBDC as well, again by usage of technology. You're absolutely right. So if we have to go to the grassroots levels, it will take some time for people to get comfortable in terms of degree of anonymity. But yes, this is a bigger concern and being addressed by way of technology.
That's why they're talking about cap, right, on the transaction. Suppose if it is anonymous and they say, okay, 10,000, 20,000 rupees a day or something of that sort, or 5,000. So it is, see what the objective in domestic transfer is, to replace wallet, cash. That is the objective. Suppose if I pay you 1,000 rupee note, it's anonymous, it's between us, right? No one comes to know. That is the one of the objective.
Anonymity, I was talking about, I don't know much about the whole market, but in the real estate market, roughly, I mean, in many cities, you have to pay about half of the price in cash. And probably there might be some gold buying going on in cash as well. So for people who are doing these transactions, then, I mean, they will still be demanding cash.
You are right.
That demand for cash
No,
will be
so
made.
RBI has, I think, aptly clarified that the rules which are currently applicable, you're talking from the income tax perspective, taxation perspective, the rules that apply as on date for physical currency will be applicable as it is for CBDC as well. So CBDC neither gives an additional leeway, neither takes away any leeway from the current rules. So for example, if you're talking about certain real estate transaction, CBDC is not envisaging in terms of if you use CBDC or don't use CBDC.
Not be used there because there's a lot of that it can be tracked, because that's one of the concerns which is coming up. Everybody is talking about whether they will use it when they know it is being tracked.
So
but people are forgetting that there are face reading camera everywhere. You know you are being tracked. It also travel and
So I think it is for a smaller notionals and all to start with. I don't know, tomorrow cap may go up, but to start with, they'll have some cap on a smaller amount.
And
Which will, anyway, it is envisaged it will not get monitored. And tomorrow, technology, everything you can backtrack and see to whom end customer, where the money is going to the end person. But that is not the objective. Objective is to replace cash.
okay, I know Shukriti was, I think, from there only she was looking at me to wind up things. So now she has got up. So I think before we end up, maybe last one point, and all of you, 30 seconds if I can take. You know, central bank has been banker to government, banker to banks. Historically, it has never been banker to people. This CBDCs, that model we have not adopted, but here is a way to make everyone, central banker to every people. My salary could be credited to a bank account held in a central bank, okay? If that happens 10 years down the line, do you expect all our physical wallet to go up from our pocket?
I doubt this will happen. RBI, during our discussions with Reserve Bank of India, they have been very clear that the intermediation role of banks are there to stay. They will never become bankers to general public. So at least whatever, this is in fact not being actively discussed, any other alternate approaches. So approach remains the same. Bank goes to central bank, gets an indent in terms of currency. Instead of physical currency, I get money in my wallet, which I then distribute.
Then central bank will start acting like commercial bank, I would say. That I think is a...
It's slightly far-fetched.
Yeah.
I don't think so too, because I think banks will have probably a bigger role, and but that kind of disintermediation that's happening in stock markets, etc. It's not like brokers have disappeared just because we can buy directly.
Correct.
I think the role will change.
Yeah.
That will happen.
Thank you very much. I know we had many questions, but